Hello, everybody. My name is Steve Chappell, Director of Trading Systems Development at VectorVest. Gee whiz, this October will be year 20 in the books. So almost half my life now, Jerry.
Goodness.
Almost half my life. It's been quite a ride. It's been a lot of fun. Listen, I teach everything from options to technical analysis to VectorVest Simple, everything in between. And I owe a lot of it, of course, to Dr. DeLito, who was the founder of VectorVest. Almost everything I owe to him, actually. But I've had a lot of great mentors along the way. I've taught some technical analysis with some really good folk, Barbara Starr, Dr. Barbara Starr, Drew, and some other folks. So it's been fun, it's been challenging, and it's been very rewarding, I think is the best part. So I'm going to focus on a couple of stocks today. One that I picked a while back here in the same stock picking panel. I actually gave guidance on when to buy it. I think there might be another opportunity with it. It's called Enphase. And then we're going to get into this Teradyne. There is an inherent difference between these two stocks. And here's where the beauty of VectorVest kind of already steps in, is even looking at this list, we can get a good feel for the kind of stock that we're getting ready to look at when we really focus on just two numbers, in my mind. I'm going to look at the RV and the RS relationship on an Enphase compared to a Teradyne, and there's a distinct difference. So when we look at the Enphase chart here in a little bit, I want you to frame that from the lens of an aggressive investor. Enphase has an RV of 1.64, which is extremely strong, and the reason why, that's upside potential, by the way. The reason it's so strong is because of the incredible growth that the stock has been exhibiting. In fact, I owned a good piece of it last year from January into about June. And I didn't get all of this, of course, but the stock was up about 264% at one point. Had some substantial retracement, as you might imagine, on the back of that and has reemerged. But really what drove all of that performance was not only the fact that they're growing quickly, but they're also became profitable on a forecasted basis. So the RV is in large part a reflection of the earnings power of the company. Okay? Now, what has yet to be established is consistency of that earnings power, right? They're just breaking ground into being steadily profitable on a consistent basis. So the RS number is not very high. But again, it's because they're still on the emerging side of the space, okay? They find themselves in the solar energy space along with companies like SolarEdge and a few others. If we look at Teradyne, the contrast is very evident when we get to the safety column. So Teradyne is much more a prudent to even conservative type of a position. The nice part about this conservative type stock is the fact that it's still got some good earnings power behind it, where even from a trader perspective, there might be some short-term opportunity with something like a Teradyne, and we're going to see that as I get into the two charts. Okay, so first things first, I believe we've got the charts in the correct order. We're going to be looking at the aggressive chart first, and then we're going to be going to the more conservative buy the pullback approach. Okay, so I'm going to open those charts for you now.
Well, you have to reach, there you go. Okay.
And let me get over here. All right, and so here's Enphase. I've got a line drawn across Enphase. This was, I believe the last time I was on the panel was sometime back in either October or November of last year. It's been a little while. And we had picked Enphase, and Enphase was starting to show some signs of life through here. And I said, look, if Enphase can get back above this area here, that's a strong area of what was support or resistance that became support to resistance again a couple of times here. If we can just get back above there, it looks like a really terrific buying opportunity because earnings is still growing all the while. And I'm not going to get into the stories about why it sold off the highs, although there's some entertainment value there. Bottom line, a lot of folks were saying things that they probably shouldn't have said in a variety of platforms. Okay, but earnings growth persisted. It's begun to tail off a bit here now. But if $35 was achievable on 60 cents forward EPS, I certainly still feel like there may be a little juice left when we're dealing with $1 on a forecasted basis at the same price level. Maybe not quite as attractive as it has been, but still, I believe some further upside potential exists here. One of the things that's happening on a current basis here is, see where I drew that line? That was resistance way back. Today, you had a retest of that area even today. So as they exhibited their breakout, this is very common. It's sort of technical analysis 101. A lot of times you're going to get a retest if it's a very significant level like a new high, okay? And that's already underway here, and so far so good. The bulls came right in and met them, and we'll see where we go from here. Bottom line, I like the stock if it goes above the high for today. At some point over the next couple of days, I wouldn't stretch it beyond that. Reason I wouldn't stretch it beyond that is because earnings comes up for them on February the 18th. And you don't want to be entering into a new position just days to less than a couple of weeks before those announcements are made. So I think there's a limited opportunity here. Having said that, we get on the backside of earnings in February 18, and these guys hit it out of the park again. Ooh. This stock is going to be super attractive. So I think this is one, if you want to play things as close to the vest as possible, you just put in your watch list. You hold it till after February the 18th, and if the market's still going up, earnings is hit out of the park like they've done the last 3 times in a row, this will be a big winner. When we go to the next stock here, oh, you guys want to you guys should chime in. What am I doing? I'm gonna
put it back on 1 year. And this is a stock that Steve and I have both looked at in the Jockey Club. We made money in the Jockey Club with it back in that whole May to September time period, and just like Steve said, there was a lot of yip-yapping out there, and that's a technical term. Yip-yapping, and it drove the stock's price down, but Steve is absolutely right. Even with all of the negativity that came behind the stock, look at the earnings per share, and that's why having forecasted earnings as opposed to just a solid number of what an earnings is so important. So as the stock's price is falling down, we're still forecasting earnings to go higher and higher, even through all of that doldrum. Yeah. And what is the stock doing? It's coming to fruition, and we get that a lot. Why do you look at forecasted earnings as opposed to just looking at the earnings that are reported? That's why. That's it in a nutshell, to help you to guide you through, the stock doesn't look so good, but earnings is rising. Keep it in that watch list, and there you go. But on the 1 year graph, it's got a little bit of jaggicity in it, but that's a solid stock.
Maybe that looks better.
That's a solid stock. And looking at that relative safety, that is, again, only germane to the VectorVest software. That's a solid stock. And that's the difference between investing in it and buying it because somebody said, go buy it, and having information that the VectorVest software gives you in regards to that. We've traded that in the Jockey Club.
Yeah.
I agree with everything they said.
You could give me the hard truth.
No, Terry. I love it. I love it.
All right.
I love it.
I Roger it myself.
I got thick skin,
Love the next one better.
Well, somebody did ask, what do we hold for earnings? Joseph asked us. Wait till I go, Joe. I'll tell you what to hold through earnings. But I will real quick just say what I love to watch here is even on the short-term trades, many of you know who I am as well. I used to work on a trading desk, and the idea of support and resistance is hugely important to me as well, even in the longer term. So again, but with my trader's hat on, I put a buy stop in above the intraday high, and I put my stop in right below the resistance that Steve has leveled here. Although I will say I would not hold it through earnings, because if it gaps down, then you're out of luck. Hurt. But again, putting a short-term trader's hat on, put a buy stop in at the intraday high, put a stop in at the low, and don't hold it through. At the resistance support rather, and don't hold it through earnings.
Mm-hmm. I love it.
Just a different perspective, or
no,
same
perfect.
perspective,
it's
I
perfect.
guess. Yeah,
it's perfect.
It's okay.
Just That's okay is okay on this.
All right, moving on. It's about to get weird. All right, now let's go. So this is a little company called Teradyne. Remember, this is more of the, believe it or not, conservative approach. They did have a sizable retracement, which I feel creates opportunity here. So if you didn't like the end phase trade, then odds are you might like something like this a little better. I've drawn out some support and resistance lines for you because I think they're both appropriate. This was an earnings announcement, by the way. In VectorVest now, you can click on the earnings tag and see that the fall was on the back of, let's just call it a less than stellar earnings report. However, the bottom line, at least as far as VectorVest is concerned, our EPS on a forecasted basis is continuing to rise. So net, there's actually something to like about what's still happening with Teradyne. I'm not sure why the 3 and 8 are on here, so I'm going to modify this just a little bit. And let me snug this little doodad up. I can't even see it.
Style.
There we go. Now we'll be able to see it. I thought.
You want
Oh, it's on
Oh, it's on volume.
I'm
Oh, I
sitting
thought
there,
that
I was
was
like,
price.
all right.
It took me a second.
I thought that was price.
It took me a second.
That's gonna change everything. We don't need a 40 MA of volume.
You did it.
I know. You let me do it.
This is your stop.
But you're the host.
Yeah. You're supposed to look out for your elders.
I'm older than you.
So we do have a little bit of trend change on a current basis. It's back above its 20. 20 usually serves as a pretty good floor on most high caliber stocks. It's true you tend to see a little bit of flutter below, but really what the stock is doing is kind of holding out in that zone. So it does like to go a little bit deeper than the 20 on occasion. I bet if we put maybe more like a 50 on here, it would jive even better on the low.
Actually,
Okay.
the 50 looks like a beautiful trend.
Yeah, that's where I'm going, Glenn. So we had a nice little bullish harami. Jerry will like that on the 50. We had a double kiss, 2 consecutive days. Those 2 days happened to form a pattern in the candlestick world called a bullish harami, which is a trend change pattern, meaning that the regression that the stock is in is about to come to an end or likely to. And with any confirmation at the open the next day, that being above the close of the green or the midpoint of the red, whichever one's higher, is actionable. So yesterday was actually the day to buy Teradyne, and you would have done so right out of the gate, essentially, even if you put the order in the night before. So let's consider ourselves already in. Our risk is the low of the pattern, so you'd set your stop loss below the 65.58 level. I'd put it at 65.46 or 65.45, whichever you want to go with. You can even go to the half. I've done it in Thinkorswim, but that's up to you. Somewhere in that around that level. As I said, we'd already be triggered in here. So any further upside action, I think, warrants interest here. You keep your stop right where it was. Inevitably, what we're doing is we're shooting for a target level. I don't like to shoot for these little wick highs. I'd go to real price action there of some sort. You start to get up into this territory. From a short-term perspective, trade's done, and congratulations, you had a high reward, low risk trade. So if you see this kind of thing develop in the future, this is something to take advantage of. Even now, I don't think that we're too late. You might consider elevating the stop loss. Something Jim talked about on the last graph was even snug it up below the current day low today. In this case, because I'm a little bit of a candlestick technician at this point, I keep it below the low of the pattern. It's not going down again until it hits below this low here in this case. So I leave it right where we put it. But I would, I'd look there now. It depends on objective. If you're more of a long-term investor, let me drag this back for you. Look at the earnings. There's no stronger correlation on all of the stock market than price growth with earnings, to earnings growth. And as Glenn said earlier, I love it. It's a staple line that Dr. DeLito gave to us, and that is earnings is the engine that drives the bus. It's the engine that drives stock prices higher and higher and higher. And so that engine is still, it's still humming. We might not have the gas pedal to the metal anymore, but it's still moving pretty strong. This looks like a good opportunity in a variety of ways, whether it's short-term, swing trade, long-term. I think you're in pretty good water here and I'm just going to leave it at that. So
Yeah, and they don't announce earnings again until April.
Right.
So they
Yeah,
just
because
announced,
it just reported.
just announced. So you're not going to run into upcoming earnings report. As an alternative, Steve, zoom in there just real quick. So you got your profit target. We're looking at what, a little less than $80, right?
I can't see it. It's
Hover
75.
your mouse over
Put your
it.
mouse on the top line.
Oh, here?
79.
Yeah, 79. Prices at what now?
71.
So that's
That's
an
$8.
$8 target. So what I would do as an alternative, I like where Steve's got your stop loss at the low of the pattern, but I would probably, as an alternative again, $4 below entry.
Sure.
That gives you a 2-to-1 profit to loss ratio there.
Sure.
So as an alternative, if you set a nice profit target, you got $8, don't lose more than 4. You're winning. You're making twice as much as you can stand to lose. So a little alternative there, just to raise your stop a little bit.
And a little different from my channels, which were a lot tighter.
Yeah.
It's a little easier to play this because Jerry set it up. That whole gain to loss is a much more workable here than it was with mine with the tighter channels.
Yeah.
Definitely.
I forget which stock we were looking at earlier, but it's the same pattern. It hit support, got a green, an up day. The second up day, I would have bought it either yesterday or certainly today.
Yeah.
And my stop would be at support. And
you're in it.
and I would look for that nice roughly 10% move to the upsides. And again, support plays a big part, and I love this one because relative safety plays a huge part. Great stock. We own this in one of our models in the retirement coaching group, and sold a bunch of covered calls. Finally, it was called away, and we made nice profits again. But just a great stock.
Yeah, the other thing, one last final thing, and we got to get it to you because my goodness, I'm out of here. So when you approach that target, one thing you can do, if you don't like the idea of just grabbing the 10 and going, just take half the position off, let the other half ride, and now it's all yours, bud.
All right.
I got to get out of the way.
Wrap up there.
Thank you for that,
That was
Steve.
great. No, it's great
Before
stuff.
Jim starts, again, if you like what you're seeing here, do not forget to comment, like, and subscribe. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.